Bill Mann understands the quant industry in a way that many others don't, working at AQR and then at Two Sigma a few years later.
The early quants were hackers at heart. They did not have tools given to them that could solve these problems. A real edge that you used to have 15 years ago was creating your own version of someone else's data. Most fundamental quantitative models are just ratios of accounting data and things like that. That's one version of the world, and I think that you need to create your own version of the world.
He now runs Harmonic, a quant trading advisory firm, and hosts the new Barbarians podcast, a podcast about crypto, AI, and the economy, named after Brian Burrow and John Heller's book, Barbarians at the Gate.
We're kind of these old Wall Street guys talking about the new world. Now, the Barbarians at the Gate are like writers of code and new technologies.
Bill, thank you so much for doing this. You worked in the fundamental research team at Two Sigma. What was that like?
Well, it was a very interesting experience from the start. I actually joined in a team that was, doing quite a bit of interesting and new things within the general quantitative research space. The fundamentals team is typically um, looking at fundamental data. So you can imagine a lot of the models and things that people were working on there were like the most common um, implementations of quantitative research, but also some of the most cutting edge. But when I joined, it was about 15 years after the team was probably established. Maybe not quite, 13 years after the team was established. And I was working with 6 generally like PhD level quants. Um, and, you know, I came from AQR and I learned quite a bit about, different implementations of um, data and uh, statistical techniques than I was accustomed to coming from AQR, which I think is a very traditional implementation of quantitative research.
Wonderful, wonderful. I guess one of the things I am curious about with regards to the fundamentals team at Two Sigma and, really at any firm, it's the fact that you're dealing with fundamental data that almost everyone can get access to. Um, I am curious, given that you're working with data that is, let's say, easier to access, how does one find edge there in a sustainable way?
You know, Going back 20 years ago, fundamental data actually wasn't very easy to get your hands on. And it was formatted in a way that was useful to quants. And, I think in academia, a lot of people were using data sets like CompuStat, but you might be missing a lot of very important formatting uh, and implementation details. So the biggest one that I think is missing is a point in time feature. Back then, there weren't point in time databases that were built to ensure that you never had look ahead bias. So if your data vendor updated the data or they updated a model that would create a time series, they would basically backfill the data and overwrite the previous version. Um, and so, I think the individual who hired me at Two Sigma actually was one of the very early people that implemented that type of formatting as, a requirement in a database. So, y you know, a a real edge that you used to have back, 15 years ago was creating your own version of someone else's data. Um, and so that sort of thing became a proprietary technology. And a lot of people wouldn't think about like data pipelines as technology implementations, but um, that's one of the most important things when you're starting up and creating technology that basically no one else has. And so a lot of times now, there are all these data providers that can provide different components of like a quant research process or an implementation, and even, trading technology and the way that you um, monitor your portfolio. So, there weren't really good execution management or portfolio management systems for quants. Um, so my previous employers basically had to build all these things themselves, and then vendors eventually try and emulate this technology. But I know that's a very long-winded question about fundamental data, but I wanted to make the distinction that even though everyone can have access to it now, that wasn't the case in the past. And then over time, most fundamental quantitative models are just ratios of accounting data and things like that. And vendors like Bara, who provide risk data, use a lot of fundamentals in their feature construction. But uh, that's one version of the world, and I think that you need to create your own version of the world. So not only do you have formatting issues like the point in time feature, you also have you might have a preference for using a different ratio than the ones that everyone else is using. It can actually be like a source of crowding. Um, if everyone starts betting on the same value factor, that can be bad when everyone stops betting against the same value factor, if that makes sense.
No, 100%. And I think what you said there about finding your own implementation of, I guess, ratios that people are aware of, finding edge there, I found that very interesting and very insightful. I guess I'd like to hear more about that. What were the conditions? What was the culture like at Two Sigma? I guess within your group, such that they were able to create an environment where the researchers could think very creatively and come up with their own versions of those ratios, or even, maybe utilizing other factors that people aren't super, or other implementations of the same types of factors that maybe other people at other firms aren't super familiar with. What were the conditions created at Two Sigma to allow researchers to thrive in doing those tasks?
I think most quant firms um, um, will all have a pretty similar setup in terms of the environment. And so, the first thing I learned about with a quant fund was that it is one of the most quiet places that you'll ever work. And like in particular, I remember going to the trading floor and being like, well, where is everyone who yells at each other? And there's typically someone who's standing up and yelling across a couple of rows, and then another guy will stand up over there. And uh, so that old Wall Street scene that you can imagine where everyone's kind of yelling and um doesn't really exist at a quant fund. And even I would argue now, I've been going around the investment banks and um, going down the equity, uh, you know, rows and the floors. You still see some people that are like interacting like that, but for the most part, like everyone has, big screens and they're just staring at them. But at quant funds in particular, I think the first thing I learned was like, they might have headphones on. They're just totally focused on their screen, which, in my previous experience had been like, the engineering types of floors would be a lot more like that, where, um, people need like, you know, total concentration. So they'll put on headphones. Maybe they're listening to music. Um, One of getting you into that mindset where, you can totally focus on like mathematical problems and then coding and what used to be a lot less friendly languages. When someone was interfacing with a quant research tool, it was probably something like in the command line. Um, and so you would see, people with like streams of data going by and coding in like lower level languages and things like that. Um, and so the biggest change that I noticed from previous employers, especially on like from traditional Wall Street firms, was just how quiet it was and how focused everyone needed to be. Um, and uh, Therefore, it also is, a little bit less social. So you might not sit there and talk to the person who sits next to you very often. Like we would go out of our way and try to do that, especially with new people and you go out to lunch or something like that. But for the most part, people are just super focused on their screens for obvious reasons. They're creating technology and coding in these statistical software languages to create new tech.
100%. And one of the things you mentioned there was that, now we have Python, and it's, as you describe, it's kind of like using an app. And I mean, I was talking to a friend for a couple years ago, and he said, yeah, Python's kind of like writing in English. And I couldn't agree more. It's a very intuitive language. And I can't imagine not only just quants, but back in the day when people had to, really develop things low level. Sounds much more challenging than things are today. I guess I am curious about, you know, given that nowadays we have all this new technology, I mean, Python's one example. I guess that's not really super relevant. I mean, it is relevant today, but it's not the forefront of what people are talking about, I guess. But right now we have LLMs, we have agents, and um, whenever I'm on X, I always see these, particularly, proponents of when of artificial superintelligence, people who truly believe it's coming, saying it's going to come for everything. Um, Frankly, when I use the technology, although it is very, very impressive, and I think junior developers are, are in trouble. But when I use it, I still think we're not there yet. But I guess my question for you is, how do you think this technology will impact the quantitative trading space?
Um, and I think with agentic workflows and other things that have come about in the last couple of years, following this explosion in the AI space, we will have workflows and work environments and processes that are automated that you never really dreamed could be automated before, but I think they will be. Um, and so if it's like reconciling things or comparing different things, like those used to be incredibly valuable jobs, especially on Wall Street, like reconciling two systems or two lists of things. Like you can imagine you have your list of securities and then the banks. Comparing those two things and figuring out where the differences are was one of the most important things that you had, right? You wouldn't know what you own unless you can reconcile your list of securities with the bank. Um, and of course, machines will just be much better at that sort of thing because they can very quickly do the comparison and then identify differences and then start investigating. Um, but LLMs are also incredibly valuable at writing code and doing some of those types of things. So I think a lot of the quant researchers and engineers that I have worked with over the last couple decades would um, work on debugging an issue on their own. You can imagine you get an error message from your IDE. I forget what that even stands for. Um, but your coding notebook or whatever kind of environment you're in. And if you were really trained and experienced and formally educated in engineering, you might understand it. But a lot of times you would just go to Google and you would search, like, how do you solve this problem? Now you can just do that same thing with an LLM and it will generate the code, the fix. And I think that each step of the engineering process, and even when it comes to architecting systems, will be enabled, and a lot of it will become automatable. Um, and so I'm really excited about doing quant research with all of these new tools that can help you just become a lot more efficient and um, change things on the fly. Hopefully, design them to be a little bit more like open-ended. So you won't end up with tech that is difficult or impossible to update later on.
Yeah, no, for sure. And I mean, this technology is improving extremely quickly. Um, I guess I have two questions. Um, and the first is just a general, given that this technology is improving, quite rapidly, and that, um, I guess the number of tasks that it can do that it previously wasn't able to do is ever expanding. As in, let's say 2022 it's released, 2020, like, GPT-3, then 3.5, then 4, then 4.0, then 0.1, then 0.3. And it, when GPT-5 comes out, or with, Grok 4 it's pretty ridiculous as well. The point is, all, these models are just getting better. And so I want to know from you what you think that means for junior quant traders, um, given that, their skill set isn't, like, they don't have the intuition that the senior guys built up. And then I guess a specific question, and I understand if you can't answer all of this, um, are a lot of the tasks that I guess you and some of your team members were working on at Two Sigma, um, would would today's agents be able to do a lot of those? Would love to hear from you.
So yeah, I guess that there are a few parts to that question. And maybe I'll start with the last part first. I do think that there are plenty of things that data scientists and experts with statistical techniques used to only be able to do with a lot of academic, like formal academic training, and then on the job uh, experience. Like, a lot of these things are just going to be done by machines, and maybe one of the easiest examples I'll give is machine learning is, to simplify a bit, like, you know linear regression on with a feedback loop. So um and that helps you uh find nonlinear ways to predict things. So you have a hypothesis driven research process, and you put data in, and out comes an answer with a linear process. A linear regression statistically is really just linear algebra. And so you imagine you put data in and you get some output. You can feed that back in, and say, like, give me a better answer. And so, through a series of feedback loops, you can start to like, search for the optimal answer to a statistical question, which is like, tell me the best predictor of a and tell me the best predictor of y with x. And what you want to do is start changing x and different implementations of what x is to find the best one. um like, years ago, that process would require someone to spend a lot of time designing code with all of that logic embedded in it. It would be thousands of lines of code. um Now, if you want to do a linear regression or a machine learning model in Python, it's like a one-line invocation of a library or a package that someone else published. So everything has become a lot easier and accessible. And when I think about the LLMs themselves, I think the same thing is going to happen. The value of the intelligence, you can imagine, like an OpenAI has spent $100 billion on training its models, and so therefore you can think about its model being worth like $100 billion, or I don't know what they're actually worth now, but it's multiples of 100, I think. Um, and so the value of the intelligence that this LLM uh, can provide is worth a few $100 billion, but I think that the value of that intelligence is going down very fast. And there are, you mentioned three. I think, there's probably five very large ones um, that are incredibly powerful and useful. So I almost always run like 4 LLMs to do almost anything. Even if I'm just answering a question, I'll usually ask 2. Um, but like just last week, I was like, yeah, and I've developed a lot of intuition. Like I needed to write some code, so I went to Gemini and I asked it to write the code, and it did a decent job. Then I ran the thing and it kept breaking. I was like, oh, maybe I'll try Claude. Yeah, but I think the use of these tools in quant research and engineering will just become a absolutely necessary part of one's skill set. So if I were younger in my career or even in school, like high school for that matter, I would just start using these things a lot more often, and I think familiarizing myself with how they can help you. You have to be careful about, cheating on writing papers and exams and things like that if you're in school. But like I couldn't imagine what it would be like to have these things when I was in high school. Like I remember we had cliff notes for books, which were basically like short versions of a book. Um, and now you can go and ask like multiple incredibly intelligent models, like questions about books or different views on different things, and you can have these conversations, and it's just very powerful. So I think if you're going to be entering the workforce, you have to know how to use these tools. um, or you'll certainly just be left behind because they make you so much more efficient.
100%. And it's funny you mentioned Cliff Notes. Yeah, I'm 21, and I can remember back in high school still having to use Cliff Notes occasionally for certain texts in English class. And what you mentioned there about having such a powerful tool to bounce ideas off, particular. I mean, for any subject, but for subjects like English, for the more qualitative subjects, where you're able to where you're really able to discuss these ideas in depth. I think that's a real example of the power of these tools for education. I don't think a lot of people talk about it. Now, I want to hear about what you do now. And you mentioned it briefly. You're hosting the new Barbarians podcast. You're also, you also founded Harmonic, for a consultancy for quad trading. I'd love to hear about those two things in whatever order you want to talk about them in.
Sure. So I guess I'll start with the order that I got involved in these new businesses. So when my non-compete with Two Sigma expired in September of 2024, I created Harmonic Insights, which at the time I set out to be a advisory to buy side firms that wanted to do and I was kind of careful about exactly what I was going to advise people to do. It wouldn't have been competing with my former employer, so I wasn't looking to like implement quantitative research or anything like that. But I wanted to help, fundamental researchers use systematic or quantitative tools. And the easiest one, again, is like that whole conversation we just had about LLMs. If you're a fundamental researcher who typically needs to read 40 documents a quarter about a single company, like LLMs are perfect for that. But they can also be intimidating, and figuring out exactly how to have a one or more large language models summarize a bunch of text can be intimidating to some of the older generation in particular. So um, you know, peop peop a lot of the people that are my age are much less conversant in these types of things. I'll just put it that way. So I wanted to help like old people, make their lives easier. Um, but then, my partner and I, Debbie, found with Harmonic that the demand was really from product and service providers of yeah, providers of products and services to quants. And so what we really found are fintech firms, um, these like startups that are trying to provide services to quants needed our help. And so uh, our very first client, we had the CTO on our podcast a couple of weeks ago. It was a company called Quanted that was trying to figure out how to, provide data to quants, and one thing in particular they were very good at is they had an AI engine that could help you find nonlinear predictors for something that you were trying to predict. Um, and so we had to help them, design this product for quants because we were like, oh yeah, they're going to be very secretive. They're not going to want to share things with you. You can't put your appliance into their environment and never have it, you know, uh, present the risk of exfiltration. And so quants are super paranoid for good reason that, you know, their data or their IP will leak out into the world and other people can replicate what they do. So um, we helped this fintech firm create something that was very secure, but also you know uh, acceptable to a quant to interface with. So there wasn't any of this risk of IP leakage. Um, And then, after a series of working with other fintech and data startups, we realized that we were, you know, almost better at just focusing on that space. So um, we are trying to figure out exactly how to rebrand this. We're not exactly a micro venture capital firm, but we are working with startups, and a lot of times we're, compensated with sweat equity. So we end up becoming investors. Um, and so we're advisors and consultants primarily to tech startups at this point. And over time, I think we may actually evolve more into like that micro VC space or angel investing. Um, and so that was Harmonic. And then about 3 months into that journey, I was actually just talking with an old friend, Mark Connors, um, who was actually a provider of services to me at one point. He was at Credit Suisse when I was at Two Sigma. So uh, as my prime broker, I got to know Mark. He would, publish research that I liked consuming, and we got to know each other, and then stayed in touch. And yeah, so like 7 years later, we're on the phone. He was like, "Yeah, I'm between opportunities. I left my previous firm, and I was thinking." Mark said, "I'm thinking about creating a podcast." And I was like, that sounds um like a great idea. It's something I've at least thought a little bit about as a way to you know, almost market our business. And so Mark and I have these independent advisory and consulting businesses that we could basically talk about on the podcast. Um, and so the new Barbarians, uh, we Mark is very focused on crypto. I'm very focused on quantitative research and AI. You put those two things together, and you have a nice overlapping area of interest with a lot of people, and I think you know we almost stumbled on something that I think has become a little bit more popular, and we're very pleased that we may actually even be interesting to like a younger audience. Like we were like, oh, we're kind of these old Wall Street guys talking about like the new world. Um, and even like the name New Barbarians, we were borrowing from an old book from the like late 80s called Barbarians at the Gate, um, which was uh, the title was really just making the comparison for the Wall Street raiders and the junk bond issuers that started doing big buyouts in the 80s. Firms like Blackstone and the private equity industry didn't exist until the 80s with Michael Milken and the creation of what were high yield securities, otherwise known as junk bonds, didn't exist until the 80s, and that actually the creation of that industry enabled the leveraged buyout, which created the private equity industry. And so there were these new barbarians at the gate, and I forget, there was a quote from one of the like CEOs at one of the banks to describe these new like raiders as barbarians at the gate, that um, similar to what would happen in you know medieval times and previous to that, when a new um, like warring tribe or country would show up at your gate and try and take you over. They were making this comparison, and then now the barbarians at the gate are like writers of code and new technologies, and so like the crypto space is very, very disruptive to old Wall Street. Um, so we may appeal to both audiences of like the in my space, like the super nerds and and the crypto space, maybe some of the cooler types of people that are on things like X and trying to make money. But I think that they will benefit a lot from learning the old ways. So you have this sort of new Wall Street, or um, the new barbarians, just to quote ourselves, in the crypto space, may not understand the old ways of doing things on Wall Street.
Yeah, I spoke to Augustin LeBron, the author of The Laws of Trading, and he used to trade at Jane Street. And one of the things that, like he said, and one of the things we were talking about that I asked him was, how is the profitability of all these different quant shops gone up so dramatically, particularly the market making firms? And I mean, it is telling they're disrupting the sell side banks, and then on the other side, it's the of crypto. We'll see, but they could be very, very disruptive to TradFi. Just before we end, I want to hear about your advice for aspiring quant researchers today. Given that there are all these new fancy tools, and I think I heard a little bit from you earlier um, about learning all the new technology, but how do you differentiate yourself in a world where it seems like, I mean, there are a million different resources out there. The exceptional people, the young exceptional people now are super exceptional, and they can learn extremely quickly. what advice would you give to people, I guess, looking to break into this world? And then, people who've just started the junior level, what would you say to them?
Sure. Well, I can almost go back to your previous question where I failed quite a bit in answering about the environment that was new to me in this quiet space. I just said people were really focused and they had their headphones on. The reason why we needed to maintain that environment and allow people to really focus like that is because it required a lot of creativity. Um, and so the early quants in particular, I think were hackers at heart. Like they did not have tools given to them. There were not statistical software packages that could solve these problems. I think being a hacker and demonstrating that you can uh, think on the fly, solve problems with maybe limited guidance will become a super valuable thing. So you can imagine like someone like me is going to describe a problem they have, and if you can go away and help me solve it and deliver an answer um in a reasonable amount of time, like that's going to increasingly become or I should say stay a very valuable way to interact and like kind of earn trust and become helpful. um so I would encourage anyone that wants to get into this space to just keep playing around with the different things that they can find online and otherwise. Of course, if you're willing to put your money behind something, that always teaches you how to do things the right way. You have to learn from some mistakes. Um, and it's easier than ever to like create your own quant model and start trading um, with one of the brokers. So if I wanted to get into quant right now, um, and I had decent coding skills, I would probably create a model and see if I can make some money. It doesn't have to be a model that is trading frequently and rebalancing and doing a bunch of fancy things. But if you came up with a way to like recommend stock buys and sells for your own personal account, um, and then just, maybe even manually go in and put the trades in and see how it does. Like you will learn from that process. It doesn't have to be a lot of money or anything like that, but I would be um, willing to be creative with your own process. Maybe get together with some friends and, these investment clubs and things like that can be valuable. Um, Quant Connect or some of these other technologies that enable this type of thing might be worth exploring with friends. You can sort of pool some resources. Um, but hackers will always thrive in this space because it is you know solving new problems that no one's solved before just requires this very creative mindset. And I think demonstrating that you're creative enough to solve problems on the fly, again, if you have like limited guidance on things and you can figure out what someone wants and then help solve their problem, like that will always be a very valuable skill.
Be a hacker, solve difficult problems, be creative, be curious. Thank you very much for the chat, Bill. Um, and for our audience watching, Bill hosts the New Barbarians podcast. I'll link that in the video description. Thanks a lot.
Thank you, Ethan.